Hello everyone, my name is Matthew Fraley. I'm the founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here and many more since 2003 for individual traders and professional institutions. Okay, got a lot to discuss. Now this video this week, first off, happy Memorial Day to everyone. Hope you're enjoying your nice 3-day weekend. And again, this isn't going to be my standard long format newsletter where I cover the market in depth. It's going to be about one of our tools that I've made available on the website. It's our KISS systems. Again, those of you who are subscribers to Breakpoint Trades know about these systems, but it's a trend following type system that I developed originally for, 401k, IRA type accounts that would stay along the indexes in bull markets with a dynamically smart adjusted trailing stop. So it would keep you in the majority of bull market runs, allow you to take very little drawdown, maybe 5-6% at most, and on a lot of occasions versus, markets can have 20, 30, 40% drawdowns. And it would keep you out of bear markets, and it would also work on individual stocks. And so I'm going to come back to this slide, but let's be honest, guys, the market has been trading in this ridiculously narrow breadth with just a handful of stocks leading this market. You can call these the Magic 8, the Magnificent 7, however many you use, but NVDA, Meta, Google, Amazon, Apple, Tesla. That is what has produced the majority of the gains this year. And, I think of this kind of like a game of musical chairs, kind of a corny analogy, but the way the musical chairs work, you want to have a chair when the music stops. That's the nice thing about the KISS systems here. They allow you to stay along these instruments, and many of you own some of these already. Many of you own Apple, many of you own maybe NVIDIA, Meta, AMD, Tesla, and this allows you to stay along these stocks, but gives you an idea of where to place the trailing stop. So if the market wants to continue to be nutty and go up and up and up, it'll keep you in these stocks if you're already in them, and constantly adjust that stop over time. If the market, if there decides to be a rug pull and the bear wants to reassert itself later this year, the systems will get out and they give you that chair. Again, I know that's kind of corny, but it's a fairly descriptive analogy. So I have the KISS systems on all 500 stocks of the S&P 500, all Nasdaq 100 stocks, 100 plus ETFs. So you can check your stocks from our resource. Okay. Going back to our website again, if you're not a subscriber, I suggest that you become one. Click the enroll button, and while there is a trial, you can click sign up now. My general suggestion is to take our 6-month subscription. That'll give you 6 months, and that gives you plenty of time to get acclimated what we have here. A lot of times a 2-week trial is just not enough. Plus the 6-month membership is your best deal as far as, you save almost 50% because you're paying upfront over time versus say a monthly membership that's $79 per month, or 6 month works out to $50 a month. So quite the savings. So discussing this market here, one of the posts we made on our trading community, we've made quite a few this weekend, but again, most of you guys already know this. So the S&P 500, for example, is up about 10% for the year. But the 493 stocks, so let's call them the Magnificent 7, Meta, Amazon, Apple, Microsoft, Google, NVIDIA, Tesla, if you take those out, the other 493 stocks in the S&P 500 are only up 1%. Okay? These 7 stocks make up 44% of the year-to-date gains. Some of these stocks have such weighting. For example, Apple has a larger market cap than all 2,000 Russell 2000 stocks, which is just absolutely insane. But you can see, this is from Bloomberg. Well, this graph discusses that. Here's a couple of visuals. Here's the S&P 500 versus the S&P 500 equal weighted index, where again each component is weighted equally. And again, you can see this divergence, the S&P with those, large stocks that have the huge weighting making a higher high, but the equal weighted making a lower high. And here's another example, the S&P, and this is the S&P SPX equal weighted to the S&P ratio. And when you do that, just look at the ratio just declining like crazy. So again, we all know that, or most of us know that if you're following the market, that there's extreme negative breath here. And for this market to continue in a healthy fashion, you need to start seeing other groups start to come on board. You can't just have 7 or 10 stocks leading the whole market. You need to see other stocks coming on board. Okay, as you know, market's been a little jittery on the debt ceiling, which will likely be resolved this week, but the market's already been running up. I kind of think that could be a little short-term sell the news event. Here's what the market indexes, sectors, commodities did last week. Again, you can see nice gains for the week for the market, but again, it's very concentrated in the Nasdaq and Nasdaq 100, which were up 2.5% to 3.6%. The Dow 30 was down 1%. And the S&P was only up 0.3%. You can look at the 21 market sectors that we follow here. Most sectors were actually down for the week. Again, where do you see the strength? The technology area, semiconductor, technology. That's where the gains have been coming in. You need to see some of these other sectors start to participate, guys. And so that's kind of the issue with the market. And let's face it, part of what kicked off last week's rally was NVDA. Okay, as you know, NVIDIA came off their earnings. They were up 25% for the week. AI has been the hot topic this year. I know a lot of you have been playing around with it. I've been doing a lot of work with it. And that really accelerated some of this recent market moves. This is kind of a funny image. I made this, by the way, I made this in an AI program. Basically, it says AI, the next prophet, Jesus, who has come to save us all. End world hunger, fix San Fran's homeless problem. That would be a neat trick. Cool the planet, stop global warming, and give us all six-pack abs. Again, I tried to make it as ridiculous as I could, but basically, AI has been touted as this thing that's going to change everything. It's going to end all the problems. It's going to, make the markets go to unbelievable new highs, etc. Okay. Again, there's a lot of good stuff about AI. I think it's going to have profound effects on many industries over time, but I do believe short term there's a bit of hype and the market's pushing up farther in the short term than it likely should. But that's what's been moving this tech area, guys, and those magic 7-8 stocks is the AI connection. Okay. Again, moving back to the KISS systems, as I said, even though we know that the market is, basically trading in a nutty fashion, again, markets, these phases can go on longer than you can imagine. I've been at this since the 90s, and timing is what's important on the market, guys. So, for example, back in 99, I know an individual who in early 1999 realized that the market was very overbought and started to short, but he was early and he got wiped out. He was right ultimately, but his timing was off. So that's the thing about the market just being stupid here. You got 7-8 stocks leading the whole market pretty much. And, that could either end right away or that could go on for months. Okay. You don't know. The nice thing about these KISS systems, if you already have these stocks, if the market wants to go up and up and up, it'll keep you in those positions. So here's a table that I made, and this is in one of the links I'm giving you on the Google spreadsheet. So here's the KISS, here's various ETFs, the SPY, so the KISS system went long on March 31st. It's raised its stop 5 times. The current stop is 405.90. Current price on the S&P is 420. The Qs went long on March 15th. It's been on a raise its stop 8 times. Stop is at 334.70. Current price is 348.40. You can see some of these other ones are flat. IWM, VYM, TLT, GLD, GDX, and XLE. By the way, XLE and VYM were some of the strongest sectors last year, and this year it's the complete opposite. They're some of the weakest sectors, with Qs being the strongest this year. Last year they're the weakest. And this table here shows you those magic 8 stocks. Again, I have the Qs index here, but all these have been long. Some of these have been, KISS systems have been long since January. One of them, the Meta, went long on November 15th. And, you know, they're doing extremely well. So here's some of the KISS systems in my program, TradeStation, where I've developed it. So again, here's the magic 8 stocks that have led this market, these large cap technology stocks, and I also have the Qs right here at the upper right. And again, STS is the smart trailing stop that is continually raised, and each time there's a new one, the system labels it as this magenta color. So on Friday, the triple Qs, the smart trailing stop raised from 325.80 to 334.70. Let's take a look at some of these individually. Okay, so here's the Nasdaq 100. So you can see system was basically out of the market last year during the bear market. It then took a long in November, raised its stop 3 times, it got out, essentially a flat trade there. It then went back long in January right here, raised its stop 3, 4, 5 times, basically put a stop out in late April here, late February.
Market data
March.
connection
Then the
lost.
system righted itself, got back long on March 15th here, and you can see it's been long since, and you can see the progression in stops. Constantly raised over time.
Market data
Protect your
connection
profits
re-established.
to give you that, you know, analogy of the musical chairs. Gives you that chair to sit in if the music stops. So the stop on Friday raised from 325.80 to 334.70. So nice move up in the stop. These stops, I designed them to generally be wide enough to ignore noise, so they're not hit that often, but be tight enough so that, you know, keeps your drawdowns really tight and protects those profits. I'm looking at some other ones. Here's AVGO. This has been a monster. This is Broadcom. There was recently a deal with Microsoft last week. Apple, so that helped push this very strongly. But the system went long back here in November, and you can see it's raised the stop a good, you know, dozen or more times. On Friday, it raised it from 682 to 750. Just look at some of these others. Here's Microsoft. You can see it was long for a time in the fall, got out, and the system went back long for Microsoft on February 1st, raised its stop here 3 times. Now the stop was not hit on this pullback, it got close, but it didn't hit. And then it started raising the stop again. The last stop on Friday moved up to 316.40. So one is long Microsoft, that's an area for a stop. And if Microsoft continues to go up and up higher over time, it'll continue to raise its stop. Again, that's what's nice about these systems. Again, the systems will stay, if the market decides to be insane and just go much further and higher than we expect on these big cap stocks, it'll continue to raise its stop. If the market decides to reverse and these stocks sell off, it'll get you out nicely. Here's Apple. So you can see Apple system went long in January. It's raised its stop 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 times. On Friday, moved up to 166.60. So it gives you a little wiggle room here, which is the important point. And you can see how the system was long last year in July, got out, hit its stop in August. Look at a few more of these. Here's Meta. Now Meta has just been absolutely insane. So Meta, the system went long back here on November 14th. And it's been able to raise its stop over 20 times. The current stop is now 244. So it's caught this whole move. Again, that's obviously an idealized thing, but the system definitely caught it. And you can see it was out back here in 2022. It stayed out mostly in cash. It was there for a short time there in May, but then it would have kept you out that whole decline during that bear market in 2022. And since, again, November 2022, it's been long this entire way, up well over 100%. AMD, one of my favorite stocks. You can see how the system's been doing here. System recently went back long here on May 5th. And as the AMD is shot up, it's been able to move its stop up many times. On Friday, it moved its stop up from 105.90 to 104, 112.40. Okay. So hopefully that gives you a good idea how these systems work. By the way, there's Google. Here's the triple Qs. Again, I already showed this, but the system's been doing extremely well on the triple Qs. Stop raised up here. Now, if you put in the SPY, it's doing fine there as well. Hasn't been able to raise its stop as much because the SPY isn't trending like the large cap tech stocks. But the SPY KISS system went long back here, right here on March 31st. And then Friday raised its stop up to 405.90. And if the S&P continues to break out here, it'll continue to raise its stop over time. Now, so this is a very useful resource for you guys. How can you access this resource? So going back to the website, okay, under systems, if you go to systems, you have the SPY and ES reversion to mean systems, which, by the way, did a hell of a job last year with 120 trades. This year, the reversion to mean systems haven't done much. They've done about 20 trades because the volatility is low this year. It's common sense. You have the KISS systems, the KISS tables right here. Okay? So you can access them from this location, and on the KISS systems we have our BPT basket where I have some of the major indexes like the S&P, the Dow. You can see those are, let's separate them. The triple Qs, the SPY, all these others are flat. And you have the Nasdaq 100 right here. Has all Nasdaq 100 stocks in here. So if you look at the tables, you have the symbol, you have a link to a profile in Yahoo, you have the STS date, you have the previous STS, the close, the percent prices away, there's the mark count. So if there's like a DeMark 9 or 13, that's important. Where the ATR is, the number trend. So let me go back to the basket here, for example. It's a little easier to look at. So if we look at the triple Qs, for example, again, you can sort these columns by just clicking the top. You can also search in the search box. So in the Qs, this is another nice thing, guys. You have the live chart here. Now the chart's updated once a day. It's not live, but it's dynamic. So you just click on it. When you click on this, here's the chart, and you can see you can use this wheel. You can zoom out, zoom in, and you can use your mouse to go back in time to see how it would have done in the past. Okay, so here's on the Qs. Your current STS is 334.70. You have the DeMark on here, DeMark 9, DeMark 13. The A, that's amateur buying, amateur selling, tends to occur near little highs or lows. So all little nice guys. You have the moving average ribbon here, MACD below, and so these charts are updated once a day after the close. If we go to Nasdaq 100, for example, so let me go back to this. So again, before we get to that, you have the live chart by clicking on the symbol. You have the profile from Yahoo. You have the Qs. You can see it added a new STS on Friday. The first one was on March 15th. There's been 9 trailing stops since it went long. Current price is 3.9% away from the smart trailing stop. So basically, you have a stop out of about 4% away from current prices. Okay, and again, you have your DeMark accounts here. Nasdaq 100. So from here, again, you can test any of the stocks in the Nasdaq 100. So if you want to look at Meta, just type in Meta, and you can see it right here. You can see the condensed table. There's been 24 smart trailing stops since the trend began on November 15th. The current smart trailing stop is about 6.9% away from current prices. Again, you can look at the chart by just clicking this, and you got your chart here. System, it doesn't show a vertical line where the system added. I'm going to add that, but again, it's right here. Like I said, the table tells you 11:15, so that's when it went long. So right here, and it's going to raise its stop. It's never been hit that whole time. Current stop is 244. So nicely protected. So again, guys, some of these stocks like Meta, maybe you're not in right now, and you're like, well, how does this help me to get in? It doesn't so much, but many of you already own these stocks, and so if you're nervous about the market, but you want to stay long with some sort of stop, that's where this is useful. You can stay long these stocks and then just check it from here and raise your stops as the systems raise their stops, okay? The other thing you'd look for if you want to get long, look for price to pull back, maybe get close to the smart trailing stop, something like that, okay? But you can check your stocks here. So Tesla, there's Tesla. Now Tesla just recently went back long here on May 22nd. And so it just recently went back long. It was long back here, early part of the year, got out. It just recently went back long. Also, you can check all your S&P 500 stocks. You can check all the Nasdaq or all the top 100 ETFs. So SSO, SPXL. So here's USO, that's crude oil, GDX, gold. Let's look at gold. So here's gold. The gold, it went long back here on March 13th, and then it hit its trailing stop here about a week ago, right here at 183.40. So it's flat at the moment. And again, you can see it right here. It's flat. So very useful resource, guys, on Breakpoint trades. Like I said, going back to the website, go to systems, go to STS tables, beta, okay? Now, here's the deal, guys. This is free for now, so it's free for all of you to look at, even if you're not a subscriber. However, we will change that eventually. So eventually this is going to be only available to subscribers. And again, guys, I suggest that you sign up for a membership. Our membership is cheap. It's been We haven't raised prices in maybe 12 years. So we did not raise prices over the last couple of years when everyone else and their brother did with all this inflation. We've kept prices the same. So again, click and roll. If you're not a subscriber, sign up now. And like I said, I generally suggest avoiding the trial membership because there's a lot of material here at Breakpoint Trades. You've seen the extensiveness of our newsletters, trade ideas, stuff like that. I generally suggest people do the 6-month subscription. With a 6-month subscription, it works out to $50 a month, which is 40% cheaper than the monthly. You get a break by paying upfront for time. Plus, again, you need more than a couple weeks to really get acclimated to the website. Okay? But again, suggest guys utilizing this powerful tool that I have had on TradeStation that is now available on the website via your browser. Okay? Last thing, besides on the website, I also did, just for convenience sake, I added some of this information to a Google spreadsheet. I've made this open to the public for now, but in here I have the KISS systems on a convenient table here for the Nasdaq, for these top stocks and some of the indexes. Nice convenient table to see everything. And when we look at this really gives you an example of, by the way, this spreadsheet also has a link to the STS KISS tables here as well. All this is going to be in the YouTube video, but take a look at this table here where I've compiled the information. So when the systems first went long on these various indexes, here's the percent up and how many times it's raised its trailing stop. So for on Meta, for example, the system went long on November 15th, as I already showed you, raising its stop 24 times. You would currently be up 124% if you followed the system then. Google, you'd be up 24%. You'd have been long from just March 21st. Amazon, you'd be up 17.8%. AMD, 41%. Microsoft, you'd be up 31.7% since February 1st. Triple Qs, you'd be up 16.5% if you followed the signal long on March 15th from the website. So again, if the market decides to go nutty and go crazy for the next couple months higher, these nice thing about the KISS systems, like I said, they will continue to participate in the market. They'll raise their stops, keep you in, but give you that protection. Okay? And when the market decides down on the rug pull, you have a nice smart trailing stop in place to protect yourself. So again, I'll give you a link to this in the YouTube video. Again, it is on the website. Just coming back to that in the systems area. And also, like I stated, guys, if you're not a subscriber, I would suggest subscribing. The 6-month membership is the best membership by price and time. The KISS tables will eventually be locked down to subscription. So, for now, utilize the resources. But if you find it very helpful, you'll eventually want to subscribe to the website to have access to it. All right, guys, we'll see what happens this week. Like I said, the market had a huge week last week. Since I'm already here, let's just take a quick look at that. Here's the S&P 500. As you know, we've been showing it is this expanded coil pattern. We rallied off of that middle portion of that coil last week. We're nearing the upper portion of it here. This shows you some confluence of trend lines. Again, you have this 41, 42.28 area, potential little gap to fill. You have this channel here. You have the 61 fib here. Those are some possible longer term targets of ours. Here's another chart of the S&P 500. And this shows you 3 potential wave counts. Again, focus on price action. You can see we're right near a little resistance here, matching this open gap from August 2022. If we can fill that, you could have a pretty clear shot up to this 61.8 fib, which is off the January 2021 highs. So we'll see if we can get through there or not. This is potential wave counts. The most bullish, if you think we're in a bull market, would be in green. We would go we're in a wave 3, and it should continue to expand and get stronger here if it's a wave 3 of a bullish condition. The other conditions, which are still more bearish longer term, but short term, but we are uptrending, would be for this to be a wave C in red, or a wave 5 of an Indian diagonal in gray. All right. Here's a weekly view of the S&P, and again, we'll see over time if we can make it to that 61.8 fib, which we've been talking about. Now the triple Qs have already made it up to their 61.8 fib retracement from the 2021 highs. Okay, this is a supply zone here, so it could also melt up into this area and still theoretically form a lower high in the bigger picture. But again, we'll play price. Here's IWM small caps. This is the pattern we've been postulating, this ABCDE pattern with an eventual rally up into this area, lower high. And but this also shows you guys how concentrated this market rally has been. Like I said, in 7 to 8 to 10 names, and the Russell here is still way down here. If the market does rally quite a bit higher first, then I would expect this to play some catch up, you know, get up into this area before forming a lower high. Last thing, back to the KISS systems here. Here's NVDA. Again, smart trailing stop raised very strongly last week from 288 to 336 out of 344. And again, just as a corny close to this video, and by the way, I generated this image on AI. So this is the musical chairs analogy. Again, when the music stops in musical chairs, you want to make sure you have a seat. And that's the thing with this market. If the music does stop, you want to make sure to have a chair to sit in. And that's what these KISS systems do. They give you that chair via that smart trailing stop. All right, guys, that'll do it. Again, I hope you had a great Memorial weekend, and let's see what happens this week. Take care.